Hi, I'm Tom Pickett, the CEO of Headspace, and I'm here at the Health Conference, and you are watching Taking Stock.
And here we are again, a bit of an unwinding of the ongoing AI trade. Sellers firmly in control here on Wall Street for this Thursday, November 6th. Energy stocks, however, catching a bid, and outside of that, that's basically it. Most of the sectors of the S&P 500 down on the day. We are expecting to see the S&P 500 for the tail of the tape finish now down, not quite down at session lows, but we are accelerating some of the selling into the close. The S&P currently down 1.1%. The AI trade, as we mentioned there a moment ago, taking a bit of a breather. Volatility creeping back up, a bit of uncertainty in the minds of market participants about what the next few weeks of the broader equities market has in store. All of that and so much more sets the stage for today's show, and it is a big one. Welcome to the broadcast. You're watching Taking Stock. I'm your host, JD Durkin. Just mere moments away, my friends, from the ringing of the one, the only iconic closing bell here at the New York Stock Exchange. We got the team from Arrow here to do the honors. Ticker symbol ARW. Labor market very much in focus today. We got the latest labor market data from Challenger Gray and Christmas that saw a huge surge of layoffs across the U.S. economy for the month of October. The technology sector leading those layoffs. More than 33,000 layoffs in the last month in that sector alone. More than 6 times what we had for the month of September. A lot of moving pieces across these markets and across the broader U.S. economy. We'll pick up the broadcast on the other side of closing bell here at the NYSE. The team from Arrow here now to do the honors. And with the strike of the 3 gavels on the iconic NYSE sounding board, officially bringing about a close to the price action here on Wall Street. Not quite finishing at session lows, but the tail of the tape across the major market indexes is as follows. The S&P 500 down 1.1 on the day. The Dow 30 accelerating, selling into the close, down 0.8. The NYSE Composite Index down 0.3. And once again, as is the case when the sellers are louder than the buyers here on the streets, that rotation off for the risk on trade, or risk off, I should say, for the small caps. The Russell 2000 down 1.8% on the day. Let's bring in our good friend, Ted Rossman. He's a senior industry analyst at Bankrate, here to help us make sense, help teach me at least a few things about what's going on for these broader markets. Welcome back to the show.
Good to be here.
I know we're going to talk about delinquencies and some credit and debt concerns that you're seeing, but first and foremost, you look at these markets. It's been a story of 2 markets this week. We've basically gotten back to some of those all-time highs, and then you're reminded of these pretty sharp pullbacks. What are you seeing in price action for today, down 1%?
Yeah, I tend to come at this from a big picture consumer finance kind of angle, which is, to me, the K-shaped economy in a nutshell. If you're invested in this market, you're feeling pretty good about things. And it wasn't a record high today, but we only have to go back about a week and a half to find one. That's true across the economy right now. If you're a stock owner, if you're a homeowner, you're feeling a lot better about things than people that are not. We're definitely seeing the high earners driving a huge amount of the economic activity these days. Moody's says the top 10% of earners are accounting for 50% of all spending. That's really emblematic throughout the economy right now.
Talk to me a bit more about that sort of ongoing K-shaped recovery. We talk a lot between the haves and the have-nots. If you're a saver versus if you're a borrower in the U.S. economy, especially considering, Ted, interest rates not as high as they have been, but we're still living in a relatively high interest rate environment. Does that put more pressure on lower income, more moderate income Americans?
For sure. The credit card market is a really good microcosm of this. The average credit card rate is still about 20%. It's fallen about a point over the past year and a half, but it's still very high. Now, half of cardholders pay in full every month and half don't. If you pay in full every month, you're avoiding interest, you're benefiting from rewards, convenience. The fact that credit card debt is at an all-time high, the New York Fed told us that this week, all-time high, it's up 60% since the start of 2021. That sounds alarming, but you look at the debt-to-income ratio is not so bad. You figure that half of these people are paying it off every month. In some respects, this is really just showing the economy's growing, consumer spending is growing. there's a huge difference if you're truly carrying debt versus if you're paying it off right away.
What are we seeing in terms of potential increases for delinquencies, for outright credit card defaults? And what do the average American credit scores right now in November 2025 tell us about the health of the U.S. consumer?
Most people have good credit. The average has fallen slightly over the past year. Most people are doing well. There's a feeling that the worst of the delinquency rise is behind us. Credit card and auto delinquencies ran up a lot over the past few years, especially 2022, 23. They actually both peaked in the middle of 24 and have leveled off a little bit since then. We knew they were going to rise off their pandemic lows. That was artificially low. Right now, we're pretty much in line with pre-pandemic trends. Banks don't seem that worried. It's been the year of the luxury credit card. In that premium space, the appetite is wide open for these lenders. Amex Platinum, Chase Sapphire Reserve, they've announced recent refreshes, fee increases. They're growing like crazy.
I'm a bit almost out of time with you. Before I let you go, we did get an ADP private payrolls data. Economic data is kind of hard to come by these days. What does that mean for the Fed in December?
Well, it seems like a cut is likely. We've been talking, though, about this low hire, low fire job market. Unfortunately, we can't really say the low fire thing anymore. October layoffs were the highest for that month in more than 2 decades, according to Challenger Gray and Christmas. We're starting to see more weakening. That further bolsters the case for a cut in December and possibly 2 or 3 more next year. We'll have to see.
Yeah, we got to leave it there. Ted Rossman, one of our favorites, joined us from the team at Bankrate. You are always welcome here to make us understand, because I get so much smarter every time I talk to you. You also make me feel better about where things are. Thanks for being here as always.
Thanks for having me.
I'll grab your I'll shake your hand first and foremost, most importantly, and I'll take your microphone. We'll go from there. Ted, my man, we are going to go for a walk. I'm going to walk backwards. I do have a group behind me. High probability that I walk right into the people who are behind me. Also probability, we'll talk about the latest Poly market odds for one of the more closely watched event contracts that we're following. What will be, in the eyes of Poly market participants, the largest company in the world at the end, not of this year, but the end of June 2026. Pardon me, folks, I'm going to squeeze right through. Thank you. Up on Poly Market right now, market participants are expecting that answer to be overwhelmingly NVIDIA. 70% odds that NVIDIA is the largest by next summer. 12% odds it's Alphabet, 11% Apple, 7% Microsoft, only 2% chance it's Elon Musk's Tesla. You look at companies listed by market cap today, far and away the dominant voice is NVIDIA with a $4.6 trillion market cap. Apple in second at $4 trillion. Tesla, currently the 10th largest company in the world with a $1.4 trillion market cap. All right, we'll take a look at a few NYSE listed companies here on the day before we toss a break. First up, Home Depot. Shares were down almost 2.5% in yesterday's session. That selling pressure has continued. Home Depot, the fourth weighted name in the Dow as it goes. It tends to pull the Dow along with it, now falling back down to its August 1st level, still trading 8% underneath its 50-day moving average. Home Depot set to report quarterly earnings on November 18th. Finally, we'll take a look at shares here at XLY. This is the consumer discretionary ETF, down 2.3%. The 10 most weighted names in this ETF were all down on the day. Helps explain why there's so much red. Amazon is 24% of shares of XLY. That name down 2% today. Tesla is 21% of this entire ETF. Tesla was down 2.5%. Shares of XLY still up 5% since the start of 2025. All right, recently I sat down with James Zhang of Sharps Technology to discuss all of the ways that the company is innovating at the forefront of digital assets like Solana. Take a look. Welcome to FinTech TV. I'm JD Durkin. NASDAQ-listed Sharps Technology is a medical device and pharmaceutical packaging company. It trades under the ticker symbol STSS, and it's embraced Solana as a treasury reserve asset. With Solana digital asset treasuries growing by the day, STSS holds millions of Solana tokens. Sharps is looking to grow along with the crypto market, and the team attended 2 of Asia's largest crypto conferences in the fall. Joining me here on the iconic trading floor of the New York Stock Exchange is James Zhang. He's strategic advisor at Sharps Technology. James, great to have you and the team. Welcome down here onto the trading floor. Nice to have you here.
Thanks for having me.
So I know you just got back from Asia meeting with investors, attended 2 of the largest crypto conferences out there, Korea Blockchain Week and Token 2049. Tell me about those experiences.
And honestly, JD, it's great. I feel like Asia has truly lagged behind in the digital asset treasury trade, but has been on the forefront of pretty much digital assets. You see most of the exchanges are in the Asian center, a lot of trading volume, especially Korea and China. So for the digital asset treasury strategy, we really wanted to expand and show the Asia region, especially with roots there, how everything is run and it's set up here in the US. I think a lot of Asian investors missed out on the private side and the round of the pipes that are formulated and basically have exposure mostly through public markets and secondary. And we're seeing how they're able to capture value right now. And especially if you look at most of the trading brokerage firms, 1 in 6 million people in Singapore are on Webull. And that is essentially the Robinhood of Singapore.
Seems as if at least a little bit the digital asset trade has slowed down at least a bit. And I'm curious your general take on that reduction of appetite coupled with maybe some subpar price action and kind of slowing volume across the board for the space.
Definitely. I think it's part of a more macro trade right now where the U.S. government is obviously slowing down. There are certain approvals and certain regulations that have not come into play yet. Certain ETF approvals, so Solana has also been stalled for a little bit. So this is all part of sort of a plan of nurturing that volatility and being able to spend your digital asset treasury to have a strategy when the token price actually goes down to use that cash to accumulate and accretively increase your Solana per share.
The general Q4 seasonality conversation over the crypto majors, it's been front and center given how well historically a lot of those majors have performed in October, November, and December. But we're in an environment, a landscape right now where we're coming off the Bitcoin all-time highs, recently hitting 125. We've had front page news with regards to Ethereum seemingly by the day. Not quite so much the same comparable price action for Solana. And I wonder, do you view it a bit as perhaps a bit of a mispriced asset, a bit of an underperformer relative to some of the other crypto majors? How are you viewing that conversation into Q4?
Great question. Well, let's just zoom out a bit, right? What makes Solana is it's honestly the most commercially viable chain. The fact of the matter is in digital assets, a lot of times you have to optimize for certain things and give up other parts. If you optimize for privacy, if you optimize for scalability and trading, you could potentially give up other parts. And Solana is able to aggregate all that liquidity without it being siloed in one location because it has the fastest transactions per second. It holds the most users, which in turn generates the most fees, helping Solana generate over 900 mil revenue last quarter to its counterpart Ethereum 300 mil. So honestly, zooming out, Solana's being the most commercially viable chain and having Asian investors now having a deep look at it, which is coming back from the Asia trip, I think is very helpful. On top of that, just look at what's successful with its predecessors. Bitcoin's 17 years old, has over 40 ETFs, hundreds of companies publicly listed, owning on balance sheet. Ethereum is 11 years old, 20-something ETFs, and has multiple companies owning on balance sheet. Solana is 5 years old, has generated the most revenue, is the most commercially viable chain, and it has the most pending ETF approvals in October of this year.
James Zhang is the strategic advisor at Sharps Technology, joining me down here on the trading floor of the New York Stock Exchange. James, it's great to have you here today. Thanks for being here.
Thank you.
Welcome back to the broadcast. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Time now for a few fintech, crypto, and AI-related headlines for your Thursday. First up, the crypto majors, Bitcoin, Ethereum, Solana, all down multiple percent today on macro uncertainty and some cooling investor sentiment on the session. Next up, Apple reportedly finalizing a $1 billion a year deal with Google to use its 1.2 trillion parameter Gemini model to overhaul Siri. I'm laughing because Apple and Google have this long history, and if you can't beat them, sometimes you got to join them. Finally, at this hour, NVIDIA CEO Jensen Huang says China is, in his words, nanoseconds behind America in the global AI race. He goes on to warn U.S. policy could backfire if it shuts out China's massive developer base. That's the latest you need to know in the world of fintech, crypto, and AI. Let's continue the conversation now with Ian Rogers, a very cool guest we got here on the show today. Ian is Chief Experience Officer at Ledger. Thanks a lot for being here.
Thanks for having me.
Okay, so we got to talk all about the new Ledger Nano Gen 5. What are you holding and what is it?
Well, so this is the Ledger Nano Gen 5. Ledger, we hold a 20% or protect 20% of the world's digital assets with Ledger devices. People are familiar with the Ledger Nano. Anyone in crypto, it's really the most identifiable, device within the world of digital security, and we've been making these touchscreen devices. One with Tony Fadell, who who was the inventor of the iPod, and called Ledger Stacks. And then we made another touchscreen device, the world's first secure touchscreens. The second was called Ledger Flex, but we really wanted to bring the better user experience of those touchscreen devices down into the Ledger Nano price point, sub $200. So 2 weeks ago, we announced this Ledger Nano Gen 5.
So no doubt that people who are crypto savvy certainly understand, but let's say someone's watching the show, maybe has only a loose familiarity with the broader crypto landscape. Could you explain this to me? It's sort of as if I'm like a 5-year-old. What are we actually
well, the
looking
reality is that we all have digital value apps on our phone, right? Banking apps, PayPal, Venmo, etc. But our phones were not designed for value. They were designed to literally to share information. They were designed to give information away, not protect it. So we use the same technology that's in your credit card or your passport, this secure element technology, to protect your secrets, right? So your secret is your private key, and that is the way that you protect your value. So that's what Ledger devices do. They are a signer device so that you can sign digital transactions securely.
Additionally, it's so important to protect against things like digital fraud, deep fakes. These are things
Exactly.
that undoubtedly our viewers have become a lot more aware of the last few years. What is protection against those, knowing bad actors have access to a lot of the same technology the good guys do?
So much of our lives are moving online, right? So that's our digital value, it's our identity, it's things that are precious to us like photos, etc. But again, the computers and phones that we use every day, they were designed to share information. So if you want to protect information, you need hardware and software. So we have Ledger Wallet, which is our software where you can buy, swap, stake, earn yield, etc. from an application on your phone. But when you sign, which is the point at which your value is at risk, you need to use a secure signer device.
What would you say are the biggest challenges? What are the biggest headwinds to maintaining security as much as possible for the space that you and Ledger operate in today?
Well, with Ledger, the security is top notch. So the biggest challenge really is people who don't realize that, and they think that it's safe to keep value on their phone, and they're using just a software application to protect their value. So really, I think that we're so used to doing everything with our phones that I think that's the biggest challenge is the education and letting people know that if what you want to do is protect value and not share information, then you need a Ledger device.
Before I let you go, almost out of time, give me a sense of what not just the rest of the quarter looks like for the team at Ledger, but 2026. What most excites you about what's on the horizon for this very cool tech?
Thank you. Now that we have a full range of these secure touchscreen devices, we're really focused on Ledger Wallet. So like I said, it's the application on your phone where you can buy, swap, earn. Originally these devices were for one thing. They were for putting Bitcoin on and putting them in the closet for 5 years. The company's been around for 11 years, right? So if in the very beginning, 10 years ago, that's what it was for. But today, it's for every investment asset. It's a it's a yield-bearing savings. You can earn yield on USD, but also spending. We have a credit card, so you can really do anything that you could do with your bank account with this device, except in your personal control.
It's very cool. You're welcome back anytime with that or any other awesome devices you have. Ian Rogers, Chief Experience Officer at Ledger. Thanks a lot for being here.
Thanks for having me.
Been great to have you. Folks, don't go anywhere. We got much more Taking Stock coming up live from the NYSE, including an interview with Amit Zavery of ServiceNow. He's standing by. We're ready to rock and roll after a quick break. Don't go anywhere. We've been doing it this way. Sorry. All right, folks, welcome back to Taking Stock. Still live down here on the trading floor of the New York Stock Exchange. Joining us now for a one-on-one interview is Amit Zaveri. He is president at ServiceNow. I'm going to pull you over this way. Right. Thanks a lot for taking the time to join us. We're doing a little do-si-do here down on the tour. Sometimes
I'm getting used to it.
Of course. Thanks a lot for joining us.
Of course. Thanks for having me.
Talk to me about what is latest with the world of enterprise workflows and really the top priorities for ServiceNow as the fourth quarter of the year continues to roll along.
Yeah, the ServiceNow has been in this place of automation. So we're basically helping companies to automate their workflow and business processes. So idea is using AI agents and agentic software to really get efficiency gains and improve how you operate and run your business daily. So we have a lot of thousands of customers who are in Fortune 2000 companies who are usually depending on ServiceNow to really improve the way they run business today.
What are the biggest ways that you've seen the general cloud computing space evolve here in 2025? And as we're having this conversation in November, have there been any big surprises to how the tech has changed?
Yeah, I think that there is definitely a lot of interest in AI, no doubt. So every customer wants to figure out what to do with AI, where to get started, how to use it, and the security and the risk associated with that. So the big thing which we're trying to unlock for customers is like, how do you really get going in a very fast fashion and go from pilot to production and get a very quick ROI on top of it. So that's the big unlock now, and we're seeing a great kind of adoption based on that.
I got to ask you about the AI Control Tower and the ways that you and the team at ServiceNow, how are you leveraging the ever-evolving underlying technology of artificial intelligence these days?
Yeah, so as you point out, AI Control Tower is a big, big win for ServiceNow. We introduced this product probably around 5 months ago, and companies like Ulta Beauty, AstraZeneca, and others are using it to kind of get full control around their AI adoption and security and risk and auditing and the whole life cycle around AI. Because without that, you can't really know what to do and how to do adopt AI, and you'll end up having a lot of risk associated with that. And that's the big unlock with AI Control Tower. And we're using it internally at ServiceNow, and so I'm bringing it for customers.
I love to ask you, people in your position, influential business leaders, about your favorite use cases. What are some of the top customer success stories that you've seen leveraging the technology of ServiceNow?
So as you saw, as I was telling you about Ulta Beauty, right? They have 1,400 stores. They have retail, they have managers in each of the stores. They have issues in running and operating it. They use agentic AI and our software to really improve efficiency, as well manage any incidents they might have, security issues they might have, the things they might require from inventory perspective. So really improving the whole efficiency, but also getting full control over their enterprise systems.
Yeah, we're certainly talking about enterprise and kind of the relationship there with AI much more than we have in years past. What most excites you about the future of enterprise AI and the top priorities on your radar as we soon enough head into 2026?
Yeah, the biggest excitement to me is now it's all real. There's definitely clarity in terms of what you can do with it. And then the ecosystem has become bigger, right? So we work, for example, with companies like OpenAI, Anthropic, Microsoft, Google, and we're trying to bring all of those different pieces together to make it much easier for customers to adopt. And that's the big value being generated now for customers there.
Almost out of time, but I got to ask you about what an agentic-based future looks like for ServiceNow.
We are all in with agentic, and it's all around AI agents working together to really reduce the amount of manual work required and take out all this soul-crushing work people do today and make them much more productive, as well as focus on a lot more value-add use cases.
Amit Zaveri is the president at ServiceNow. It is a great privilege to have you on the show. Very grateful for your time today.
Thanks for having me.
Thanks a lot for being here. Folks, don't go anywhere. Much more Taking Stock coming up after this quick break, including the latest from Money 2020's very own Scarlett Sieber. Don't go anywhere. More show after this.
Welcome back. I am Scarlett Sieber from Money 2020, and on yet another installment of Back of the Napkin Math, we got your napkins. We got your money. Why? No one knows. And we got a pen. So we're out here winning. Also a guest. Hello, Zachary. We have Zachary here from Money 2020. Wow, so ironic you're next to a cup of Money 2020. All right, when we sit here and think about back of the napkin math, oh, by the way, I should probably give you a napkin to do the mathing.
Okay.
We're gonna pick a person and basically make a guess on if they were to go, we're here in this beautiful New York Stock Exchange, if they were to be listed as a company on the New York Stock Exchange, what would their market cap and enterprise value be? That's what we're about to do in here.
Okay. All right.
So,
I feel very confident.
you got 30 seconds, by the way, to get your answer.
Confident now. Okay, great. I got
Gotta
30
be a
seconds.
rush. Gotta be a rush.
Fantastic.
The person is Ashton Hall. Do you know who that is?
No.
The famous influencer, the ex-football, I think college football player, the 3:30 a.m. to
the sprinting Saratoga.
yeah, the Saratoga water.
Saratoga guy.
The Saratoga
I
guy.
see you, man.
So his estimated net worth is around 2 million. He has 18 million Instagram followers, 4 million YouTube followers. He got a lot going on there. He's got sponsorships. He's got affiliate marketing. He's got his own online coaching subscription business, Zachary. He's
Okay.
out here with lots of different revenue streams.
Are there any numbers around these revenue streams?
Sure. So if you the a subscription, I would, from what I'm aware of, the coaching, between $250,000 and $500,000 a year.
Okay.
Then he's got the YouTube, which we know enough to know that that's probably around $1 million, a little over that $1 million a year.
Okay.
Then you've got the sponsorship, let's say $500,000 plus.
Does he do long form? I really don't know much. Does he do long form stuff too, or is it all like kind
That's
of
a
social
question
media?
that I do not know the answer for.
Okay. I'm just wondering, the YouTube thing, that algorithm will pay you, but only in certain ways. Just curious.
I'm pretty sure that he gets paid on that quite well.
Yeah.
And he does do affiliate marketing for supplements and stuff because the dude is jacked.
Yeah. Yeah.
So with that,
I've been drinking Saratoga water, just trying to look like him.
there you go.
All right.
So with that, 30 seconds, Ashton Hall, what would he go for on the New York Stock Exchange if you were not a person and yet a company?
Okay. And you said 50K on the last part, right?
By the affiliate marketing, yeah.
Okay. All right. So, am I starting now?
Yeah.
Okay. So, $2 million net worth. We're just gonna like kind of throw that out the window at least a little bit. The important part of this is going to be the actual multiple, right? Because we're starting with obviously not small numbers to most people, but small numbers comparatively. The $2 million net worth, 250, like he's probably making 1.5 a year, something like that, based on what you said.
Yeah.
So 2 million, 1.5 a year. Like, I want to put a good multiple on it because he's new, he's like up and coming, but at the same time, the internet is wildly fickle, and they could
They are.
just completely decide that Saratoga sprinting guy is no longer important.
They could.
So I'm gonna Ashton, a lot of respect, even if I didn't know your name about 30 seconds ago.
What's the number?
He's a penny stock. Like, it's gonna be I'm gonna say he has like a $15 million net worth, or not net worth, sorry, $15 million enterprise value, like market cap. And that's, I gave him
15
a,
million. I know that there's some Ashton fans that are watching this right now. So you know what? You disagree with Zach. What do you think should be the right What would be the right market cap for Ashton right here on the NYSE? Put your thoughts in the comments.
and Ashton, if you see this, just tell us what you're actually worth.
Well, let's try that. All right. Until next time.
Welcome back to the show. With our remaining 45 seconds or so, we'll get you quickly caught up on what to expect tomorrow on Wall Street. Once again, scratch what happens tomorrow on Wall Street. It is Dean's birthday today, and the crowd goes wild. Shout out our Cheddar and Taking Stock producer extraordinaire, Dean. Very happy birthday, my man. Hope it is an incredible one. How much time do I have left? 25 seconds. Earnings tomorrow from DraftKings. Oh no, DraftKings and Airbnb today after the bell. Tomorrow we hear from the folks at Wendy's. No shortage of Fed speak, including Stephen Miron, who's set to speak in the 3 o'clock hour tomorrow down in Washington, D.C. Tomorrow morning, 9 a.m., NYSE TV Live and FinTech TV Live, both down here on the trading floor, counting you down to the open. That's going to do it for Taking Stock, and we will see you tomorrow.